Today, Bitcoin slides to the $94,000 level. Robinhood says the SEC ended its investigation into the company's crypto arm. And Tom Robinson of Elliptic breaks down how hackers stole $1.5 billion from crypto exchange Bybit. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Crypto investors are still making sense of a massive hack against crypto exchange Bybit. We'll talk all about that in just a moment. As of noon Eastern, Bitcoin dipped by 1% to $94,400. Ether slides 5% to $26.60. And Solana continues to plunge, tumbling by more than 8% today to $153. Now, also happening this morning, shares of Strategy falling more than 2.5% as of noon Eastern. The move comes as the company announced the completion of its $2 billion offering of 0% convertible senior notes due in 2030. Now, the company said the money raised would go toward acquiring more Bitcoin, along with working capital. Strategy also announced roughly $2 billion in Bitcoin buying throughout last week. Okay, let's talk about the top stories. President Trump's SEC continues to reverse its strategy for digital assets. Robinhood announced the regulator is dropping its investigation into the platform's crypto arm. Robinhood received a Wells notice back in May. Chief Legal Officer Dan Gallagher said in a statement this morning that the investigation should never have been opened and that Robinhood never allowed transactions in securities. Shares of Robinhood were down more than 3.5% as of noon. Meanwhile, last week, NFT platform OpenSea, which received a Wells notice back in August, also announced the SEC ended that investigation. And we reported on Friday that the regulator's lawsuit against Coinbase may get dropped without the company having to pay any fines or change anything about its operations, pending approval from the commissioners. Next, the Montana House of Representatives voted against a bill to create a state crypto reserve. Now, the idea was shut down by lawmakers in a 41-59 vote, which included bipartisan opposition. The bill would have allowed Montana to invest in digital assets as well as precious metals. This comes as a slew of states also weigh whether or not to create a reserve, while the federal government mulls over the idea of a stockpile made up of seized crypto funds. And jumping into our main story, crypto exchange Bybit says that it fully recovered after falling victim to the largest crypto heist on record. Hackers drained about $1.5 billion from the company on Friday. CEO Ben Shu shared then that an ETH cold wallet was compromised, but assured all other cold wallets were secure and withdrawals were normal. Then last night, he shared an update saying that the ETH gap had already been closed with the help of Galaxy Digital, Falcon X, and Wintermute. I spoke with Elliptic's Tom Robinson to find out how hackers got a hold of the funds and whether Bybit could get any money back. Okay, so let's start with the scope of this hack. $1.5 billion taken. Put that into the context of just how big that is for the crypto industry.
I mean, it's by far the biggest crypto hack that we've ever seen. Number two was the Poly Network hack in 2021, which was $611 million. And actually, most of that was returned by the hacker to the victim. So this really dwarfs anything we've ever seen before.
And how did the hackers manage to take these funds? There's talk about it moving from cold storage onto another wallet.
So that's not entirely clear yet. There have been reports online that perhaps the attacker managed to install some malware on the victims' systems. And that allowed them to mislead Bybit into signing a transaction, an Ether transaction they didn't mean to.
So the point of vulnerability that we're talking about is this movement from a cold wallet to a hot wallet. Why is that a particularly weak point?
Yeah, so exchanges will store most of their cryptocurrency in what's known as cold storage, which has the highest level of security. But in order to withdraw these funds, because a customer might request them, then they need to move it into what's known as a hot wallet, which can enable that. And so that movement from cold storage to a hot wallet can be a point of risk.
Is there anything that stands out about how this hack took place, or is this a standard practice that you often see from bad actors?
So this is fairly standard practice, especially for DPRK, so North Korea, who we believe is behind this hack. A lot of the same techniques are being used, just the scale of it is much greater. That actually might prove to be quite challenging in terms of laundering these funds. It really is unprecedented, the scale of this hack. and they might find it difficult to find cash out points or services that will help them to launder these funds.
And to that point, data analytics firms, including Elliptic, point to the hackers being Lazarus Group, backed by North Korea. Bybit is working to get the funds back, but how likely is it that they'll actually recover these funds? And what does that undertaking look like right now?
So unfortunately, if we look at other North Korea-related hacks, not a great deal of those funds have been recovered. However, as I said, the scale of this hack is so large that perhaps there is greater scope for recovering these funds, just because it's going to be so difficult for North Korea to launder and cash out on this scale.
When I think of similar attacks, I think of Axie Infinity in 2022. And to your point, only 30 million of the $611 million hack was actually recovered by law enforcement. So what recourse does a Bybit or do different global jurisdictions and authorities have in this kind of situation?
So not a lot, to be honest. So far, very little funds have been recovered when North Korea is involved in stealing cryptocurrency. I think that these businesses need to make sure they have sufficient reserves or insurance to cover this type of risk.
Now, part of what Elliptic has been doing is tracing the funds on the back end. Walk me through the latest on that front.
Yeah, absolutely. So the launderers have gone through a process of splitting the stolen funds up, passing them through hundreds of different wallets, and they're now converting them from Ether on the Ethereum blockchain to Bitcoin on the Bitcoin blockchain. And we think that they're doing that in order to now what's known as mix the funds. So that's using services known as mixers to try to conceal the blockchain trail and make it more difficult to follow these funds.
One question that I've had multiple people ask me is the entire point of these blockchains being public is so that people can look at these transactions. So if you're going from Ether to Bitcoin and you haven't yet hit one of those tumbling services, why is it that it is so difficult to trace these funds?
So tracing is certainly very, very possible. It's just that depending on exactly what kind of techniques the launderers are using, that tracing can take some time. So if they're using a laundering technique that we've never seen before, then we need to adapt to that and develop techniques to perform that tracing in a rapid way. And so that buys them some time. You know, an extra few minutes can be all it takes to enable them to cash out through an exchange or a broker.
And so far, it's roughly 13–14% of the funds have been laundered, which means that they're no longer recoverable?
No, so we know exactly where they are. It's just that the laundering process has begun for that 15% of the funds. So they have been converted into Bitcoin. We can still see them, we can still track them, and so there's still the opportunity to seize them.
Is there anything that firms can do differently, or is there some action that customers and individual investors should do to keep these funds safe?
I think general levels of cybersecurity need to be maintained. As I said, it's still unclear what exactly caused this breach, but I think the same types of cybersecurity that every other business has in place.
So are you seeing more sophisticated tactics by these bad actors that make it harder for you to trace these funds?
So we're seeing North Korea being helped by one rogue cryptocurrency exchange called EXCH, Excha. Nearly half the funds have been laundered through this service. And they have, in the past, also laundered proceeds of other North Korea-related hacks. And so this exchange, isn't being properly regulated. It's somehow fallen outside the regulatory perimeter. So I think that there is an opportunity here to make sure that these types of rogue exchanges can't thrive and can't facilitate this type of laundering.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.